Welcome to the deep dive. Today, we're zeroing in on a massive corporate maneuver, a huge announcement from Barrick Mining Corporation. And this isn't, your standard quarterly report. We're talking about a decision to potentially spin off some of the best gold assets on the planet.
It's a really dramatic move. I mean, when a titan like Barrick decides to even explore an IPO for its crown jewels, the entire market just stops and listens.
Right.
And, IPOs are always about one thing: unlocking value. So our job today is to figure out what value Barrick thinks is trapped inside its North American portfolio.
Especially since this comes right after some spectacular financial results, so they clearly have the muscle to do it. The question is, why now?
Exactly.
So for our deep dive, we have two key sources. First, the Q3 2025 financials from November 10th. This shows the incredible cash flow that made all this possible. And second, the big one, the December 1st announcement laying out the IPO plan itself. Putting them together gives us the full picture.
It's a bit of a masterclass, really. They're showing off their ability to make huge profits right now, while also setting up this really complex plan for the future.
Okay, let's unpack this. Barrick's big plan to launch what everyone's already calling NewCo.
Oh.
So the core announcement drops on December 1st. Barrick's board gives the unanimous green light to start exploring an IPO for a new company.
A subsidiary, yeah. One that will hold all their best North American gold assets.
So this is past the just talking about it stage. This is happening.
Oh, absolutely. And the strategic intent is crystal clear. It's all about optionality, specifically jurisdiction optionality.
What does that mean exactly?
It means they want to give investors a clean way to buy into North American mining. For a lot of global funds, the U.S., Canada, these are seen as stable, lower-risk places to operate.
And that stability gets you a better valuation, a premium.
That's what they're betting on. They want that premium. Their official line is giving shareholders optionality around jurisdiction in a pure gold company with growth.
But the key detail, and this is what I find fascinating, is the structure. This isn't a full sell-off.
Not at all. And that's the most important part. This is not Barrick walking away. The plan is to sell only and I'm quoting here, a small minority interest.
So they keep control.
A significant controlling majority interest. So they get all the benefits of the IPO, the cash, the higher valuation for that piece of the company, but they don't lose control of their best assets.
It's like having your cake and eating it, too.
It's a very confident move. Right. It tells the market, we think these assets will be worth way more in the future, and we plan on being there for it.
And the market loved it, right? The stock jumped almost immediately.
Yeah. Barrick stock, that's NYSE, ticker B, rose 4.6% right on the news. That's a huge vote of confidence.
So the street believes the value is there.
It seems so. Now we just have to wait for the details. They've said they'll give an update at the full-year results meeting.
Which is coming up in February 2026. That'll be the next big checkpoint.
For sure.
Okay, so here's where it gets really interesting. We have to look under the hood. What actually makes this portfolio, as the interim CEO Mark Hill called it, in a league of its own?
Well, when you look at what they're putting into NewCo, you realize it's all their best stuff. It's a foundation of stability and just generational assets.
It's anchored by three main pillars, right? The first is their piece of Nevada gold mines, NGM.
That's the bedrock. Barrick holds about 61.5% and operates it. NGM includes monsters like the Carlin and Cortez mines. It's massive.
Okay, what's number two?
Number two is Pueblo Viejo, down in the Dominican Republic, another huge, consistent producer. But the real excitement, the thing that justifies all this buzz, is the third anchor.
The Fourmile gold discovery.
That's the one. It's their own project, wholly owned in Nevada.
Okay.
And it's the future growth engine for this entire NewCo entity.
And the numbers on Fourmile are where things go from just good to almost unbelievable. The Q3 report had a preliminary economic assessment for it.
The PEA, yeah. It's the first real look at the project's financials. And they call it, and this is not typical language for a big miner, one of this century's most significant gold discoveries.
You just don't hear that kind of talk from a major corporation.
You don't. But the data backs it up. The gold grades they're expecting are projected to be double the grades of the nearby Gold Rush project.
And Gold Rush is already considered top tier, so wait, double the grade. What does that actually mean in practice?
It's the ultimate cheat code for a miner. It means for every ton of rock you dig up and process, you get twice as much gold. Your costs plummet.
And Fourmile has the size to go with that quality.
Oh, yeah. The PEA is projecting average annual production of 600 to 750,000 ounces of gold.
For over 25 years.
A 25-plus year mine life. And just for context, the benchmark for a global Tier 1 mine is 500,000 ounces a year. Fourmile sails past that.
And I think it could get even bigger. The report says current drilling could support doubling the existing resource next year alone.
Which brings us to the most important number of all, the cost. The all-in sustaining cost, or AISC. That's basically what it costs to get 1 ounce of gold out of the ground.
And for Fourmile, they're estimating, what was it?
Approximately $650 to $750 per ounce.
Okay, let's stop there. $750 an ounce to produce. And in Q3, their realized gold price was $3,457 an ounce.
The margins are just staggering. I mean, even if gold pulls back, that is an incredibly profitable mine.
What's the industry average cost right now?
It's trending around $1,200 to $1,400 an ounce. So Fourmile could be producing gold for literally half the cost of its average competitor. That's the crown jewel they're putting in NewCo.
So that's the big question then. If these are your best, lowest cost, longest life assets, why sell even a tiny piece of them?
That's the core tension. You're right. Barrick's argument is that by carving it out, they create a story the market will value more. The parent company is so big, so diversified with copper and everything else, that the beauty of its North American gold gets lost.
It gets diluted.
Exactly. This isolates it, shines a spotlight on it, and lets them use the proceeds to fund their other massive global plans.
That takes a lot of corporate confidence, which brings us to the financial engine room. Those Q3 results that powered this whole strategy.
This is where you see the machine just running at full tilt. It wasn't just a good quarter, it was a record-setting one. It gave them the power to do this from a position of absolute strength.
Let's run through the numbers because they are pretty jaw-dropping. Q3 gold production was 829,000 ounces, up 4%. But the cash metrics are the real story.
Right.
Record quarterly operating cash flow of $2.4 billion. That's up 82% from Q2.
And it's important to distinguish that from free cash flow. Operating cash is the raw intake. Free
Right.
cash flow is what's left after all the bills are paid.
The money you can actually use.
The money you can use for dividends, for buybacks, for big moves. And that number, free cash flow, hit a record $1.5 billion, up 274% in a single quarter.
Just a fire hose of cash.
A fire hose of cash. That's what gives a board the confidence to completely restructure the company.
So with all that money coming in, how did they immediately reward shareholders?
They moved fast. The board approved a 25% increase to the base dividend, and then they added a performance dividend on top of that.
And what about the buyback program? That's always a big sign of confidence.
A huge sign. They expanded it by another $500 million. The total program is now authorized for up to $1.5 billion. All told, they've returned about $1.6 billion to shareholders in just the first 9 months of the year.
So they're taking care of investors in the short term while planning this huge long-term move with NewCo. It suggests a complete, corporate reorganization is underway.
That's the big picture. This is all happening alongside a leadership change, too. Mark Hill took over as interim CEO in September after Mark Bristow left.
And the board is looking for a new permanent CEO now.
They are, but they made it clear that the strategy is set. The commitment to Tier 1 assets isn't changing. And part of that strategy was cleaning house.
The divestitures. Selling off the assets that didn't fit that Tier 1 model.
It was pretty aggressive streamlining. They sold Hemlo in Canada, Tungon in Côte d'Ivoire, add in the sales of Donlin and Alturas earlier in the year.
And that brought in a lot of cash.
About $2.6 billion in gross proceeds. That money shored up the balance sheet, funded the buybacks, and gave them a clear runway for their main growth projects.
So they trimmed the fat to feed the muscle.
Perfectly put. The focus is relentless now, Tier 1 assets only. And NewCo is the perfect example of that gold thesis. But the parent company, Barrick, is still very much a global player.
And that includes a key metal that isn't gold.
That's right. This IPO is all about North American gold. But Barrick itself is pushing hard on its global gold and, critically, its copper assets. Projects like Reko Diq and the Lumwana expansion are moving ahead of schedule.
So the parent company becomes this diversified metals giant.
While NewCo becomes the pure-play gold investment.
Okay, so let's wrap this up. What does this all mean for someone watching this unfold?
I think it creates two very distinct, very different investment opportunities. First, you have NewCo, a focused, high-margin, high-growth gold company in safe jurisdictions, anchored by a generational discovery.
And then you have Barrick.
Then you have Barrick, the parent, a cash-rich, diversified global miner that still owns most of NewCo, but is also aggressively growing its copper business for the future.
It certainly simplifies the story for an investor. If you just want exposure to Barrick's best gold mines, you can get it without the complexity of the global portfolio.
That's the entire strategy. It's a masterful rebalancing. But, and this is the big but, it all hinges on execution.
Especially at Fourmile.
Especially at Fourmile. The projections are almost too good to be true, right? Doubling resources, sub $750 costs. So the provocative question for you, the listener, is this. In a world where gold is over $3,400 an ounce, how much of NewCo's success is riding purely on the timely and cost-effective development of that one single incredible discovery?
Because the execution risk on a project that big is where all the drama is going to be.
That's where the real uncertainty lies.
A vital point. And something we will be watching very closely come February 2026. That's all the time we have for this deep dive. We hope you feel thoroughly informed.